Hi, this is Tim Dial with Nexa Mortgage. Just wanted to put this short little video together to go over a little bit of information about a down payment grant program that we have available through one of our lender partners. It's an outstanding program we've been utilizing a lot to help purchasers who don't have a lot of cash to close. I usually recommend that people still have like a couple $1,000s in the bank to get the process started, but that's primarily because you're going to have expenses on the front end, like you'll be paying for an appraisal. You'll be paying for, usually there's an earnest money deposit once you get something under contract. A lot of time the seller is going to require like $1,000 deposit that will go toward the closing, or you could potentially get that back if we have enough covered with the down payment assistance and seller assistance and stuff like that. You could potentially get that back, but you still want to have at least a couple of thousand. Plus you might want to do inspections. Most people do, and it's a great idea too. Just as an example, I have somebody right now who's purchasing the house that they're buying is only 2 years old, and as a result you would think that there wouldn't be a lot wrong with it. Well, they found out that it has hail damage and needs a new roof. A roof would be $25,000 or $30,000, and so they're not going to go through with it unless the seller replaces the roof, because you don't want to inherit a problem like that. The seller's insurance should cover most of it, and they would probably have a deductible, and that might be why they were trying to sell it without replacing the roof. It could be because they didn't want to pay the deductible and they were hoping somebody wouldn't do inspections, right? So generally you're going to want to do inspections because if something like that comes up. I mean, you're talking about spending $300 to $500 on inspections, whereas it's going to save you $25,000 or $30,000 because you're not going to have to replace the roof, right? So anyway, that's a little bit about how that works. But I want to go over the Elevate Down Payment Assistance Grant. We do this through one of our main partners. Nexa Mortgage is the largest mortgage broker in the country. We have relationships set up with hundreds of really good lenders, and there are a few of them that I utilize on a regular basis. One of them is Orion, and they have the Elevate Down Payment Assistance Grant available, which is an excellent program. And so I'm going to get into that and cover that a little bit. So I'm going to share a screen here. It'll take me just a minute to share this screen with you. And let's see. All right. So I'm going to share this screen. You should be able to see it now here. And I'm going to play just a little bit of this video about the DPA grant, and then I'm going to go over it a little bit on my own as well after she talks a little bit. So bear with me, and I'm going to play this just a little bit here shortly.
So our Elevate FHA program is amazing. This again is a forgivable grant that is not a lien on the property, and it is forgiven after 6 months payments on the first mortgage. So this is a really amazing program and no lien on the property. So some key features is that the FHA program has both 2% and 3.5% forgivable assistance. So when you're playing with the pricing, you want to look at that. Also, you can do a 25 or a 30-year term on that first mortgage. This program also does allow for manual underwriting. So you can also do a manual underwrite on this program, but there are going to be some overlays. Our target borrower for this, 680 plus credit score on the Elevate. Due to the pricing, you really want to stay above a 680. Those lower scores are going to create some discounts, and it's going to be difficult for the cash to close. You also want to target this borrower for someone that has either their own funds, gift funds, or a larger seller concession. Again, the pricing can create a discount, so you don't want to have to come into that with the closing and the cash to close. So you really have to watch that on that borrower. So seller concession, again, is going to be very important.
Okay, so that's something I wanted to just kind of play a little bit about that here initially, and then go over a little bit of it. What she's talking about is if you're a 680 or better score, you are going to have better pricing from their pricing engine, and therefore the closing costs won't be quite as high. On this program, it does have higher closing costs generally because they're giving you 3.5%. I never use the 2%. I always use the 3.5%. I don't see any reason why we would use the 2% when the down payment itself is 3.5%. So anyway, because they're giving you 3.5%, the pricing on it's a little bit higher, and that means the higher closing costs. If your credit score is a lower score, like let's say you're at a 620 score or something like that, we can still do it, but the pricing's higher because of the score, and we need to get the seller to cover more closing costs. The seller on an FHA loan can cover up to 6% of the purchase price in costs. So, as an example, if you're buying a $200,000 house, they can cover up to $12,000 in costs. And therefore, if we get enough covered, we can still use a lower score and be able to make sure you don't have very much out-of-pocket costs. So that's kind of how that works. It's just a pricing thing. Now, I have had situations before where somebody gets approved for this program. They are looking for properties to purchase, and they're struggling with it because it's hard to find a seller that will cover enough of the cost. That has happened on occasion, but the other thing that I have found is that a lot of these borrowers are trying to put offers in on homes that just went on the market within the past couple of weeks, and those sellers are just not that motivated yet. The ones we've had the most success with are the ones where somebody, they get approved for this program, they find a house that's been on the market for 2 or 3 months, and that person is much more motivated and they are willing to cover more of the costs. What you can do is you can offer full price or maybe even a slightly above full price offer, have them cover 6% of the costs, and then that way we know that we have enough costs covered that we can do this transaction. So that's how that works, but it's an excellent program because it is forgiven after 6 months. I have heard that they might start instant forgiving them, but it doesn't really matter one way or another, because with this program, what we're typically looking to do is to, somebody's calling. So hang on a second. Yeah, that's a spam call. But anyway, what they're typically looking to do is to refinance, or what we're looking to do is to refinance them after 8 months. That's the goal, because FHA has a requirement where you have to be in your loan for 210 days and make a minimum of 6 payments before you can refinance. And so they're saying that you have to make, or that it's forgiven after 6 months. Well, it's going to take us about 8 months anyway, because you skip a month when you purchase, you skip a month of payments. So your first payment, like let's just give you an example. Let's say you close on a transaction in July. Your first payment's not going to be due until September. So by the time you make 6 payments, it will have been about 8 months, and that will get us past that 210-day FHA requirement. So that's what we're really looking to do here, is we get you into this program. It is a slightly higher interest rate, and because of the 3.5% they're giving you, and the costs are a little bit higher, but we try to get the seller to cover more of the costs, and then we refinance you after 8 months and drop that payment way down by usually at least a couple $100 a month after 8 months. And so that's the goal, and that's why we utilize this program. And I just basically set up a follow-up in my account that says, okay, reach back out to this buyer after 8 months, and I'll put a date in there when to reach out to the person, and then we start the loan process on the refinance at that point. Because here's the other nice thing, because this is a forgivable grant and there's no second mortgage on the home, we can actually do this refinance as a streamline refinance. And if you're not familiar with FHA Streamline, it doesn't require any income documentation. There's no new appraisal, so you don't have another appraisal cost. It's super fast and easy. The only issue with the FHA Streamline refinance is that they don't let you roll in costs. So when you do the Streamline, typically you're going to have to bring cash to the closing, but it's usually going to be like about a month's worth of payment. So just to give you an example, let's say we're doing the Streamline refinance and we're closing your Streamline refinance in July. Your normal mortgage payment is $1,800. You might have to bring close to that $1,800 to the closing, but then you don't have a mortgage payment. You can skip the July mortgage payment, and then you also don't have to make a mortgage payment in August. Your first mortgage payment would be due in September. So you're basically bringing about 1 month of payment to the closing but you don't have to make a payment for 2 months, right? So in the end, you still end up with, with more money in the bank than you would have had you not done the refinance, and you're able to drop that mortgage payment by $200 or $300 a month. So it makes a lot of sense. And so that's how we try and situate this. And when we go through the streamlined process, we try to make sure that that you're bringing less than 1 month of payment to the closing, if at all possible. So that's the goal anyway when we're going through it. So anyway, that's what I wanted to cover really quickly. This is a wonderful program called the Elevate Down Payment Assistance Grant, and we've been utilizing a lot. Now the other part of this too is we have 2 different companies that offer a down payment assistance grant that's almost identical, and so this is just one of them. And the other one we have is by a company called EPM, and it's a great program as well. So whenever I'm doing this, I basically just look at, okay, who has the better deal at the time, who's giving us better pricing, because the grants are almost identical. The only real difference that I can see is that the other down payment assistance grant is forgiven at the closing. So immediately there's they're forgiving it from day one instead of waiting for 6 months to forgive it. So, but we just look at the pricing, because you're not going to refinance until after 6 months anyway. So it doesn't really, when it's forgiven doesn't really matter, as long as it's forgiven before we refinance. So that's pretty much it. That's what I wanted to cover really quickly here. Didn't want to spend an immense amount of time on it, but I do want everyone to know what this program is and how it can really help first-time buyers get into a house. One other thing, I think there is one other difference in the 2 grant programs, I believe. This one has a 160% of AMI for first-time buyers. That means that the income of the person can't be over 160% of the area median income. Almost everyone's going to be under that, so it's not going to be an issue. But if you were over that, the other grant program doesn't have a limitation. You can actually do the grant even if you're above that. But so there's the other thing that's a little bit different. But like I said, I haven't ran into anybody yet that needs this program that would be over that 160 anyway, because it's a lot of the first time buyer down payment assistance programs require 80% or under the AMI. This is doubling that at 160%. So that would put for most people, that's going to put the max amount at like 140 to 160,000 a year. And if you're making that kind of money, you probably don't even need this grant. So anyway, that's pretty much it. That's what I wanted to cover very quickly. If you have any questions or anything, certainly let me know, as I am here to help. Thank you very much.